Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. I want to remind everybody that, what's today? Wednesday? Yeah. Tomorrow, we're going to have Twyla Brace with us for our monthly meeting with Twyla Brace. You are starting to know Twyla by now. If you don't want to. What segment is she going to be on, Devin? I forget. Second. Okay, so 8:20 Central Time. Tomorrow morning, we'll have Twyla Brace with us. Twyla is the expert, in my opinion, and this will come out sooner or later in the rest of mainstream media, although she has gotten some great, she's been on Fox News, she's been on all the mainstream outlets, she's done a wonderful job. But, more news coming out today about Obamacare. If you follow me on Twitter, if you don't, it's at Financial Issues, and I hope you will. I got some feedback here. And I sure hope that you will follow me on Twitter. It's at Financial Issues. It's not Dan Celia. People email me. I can't find you on Twitter. It's not Dan Celia. It's at Financial Issues. And sent out an article this morning in reference to, and you'll see it on my Facebook page too, again, Financial Issues on Facebook. And you'll see the article. And it's a reference to what's going on in the cancer centers. And what's happening is cancer centers now, those that are treating cancer patients are saying, hey, look, if you're on Obamacare, we got some issues, and there's an awful lot of them turning away cancer patients as a result of Obamacare, and I heard one piece of media this morning criticizing the cancer centers. Wait a minute. Why is it they don't have a right to pay their expenses? I mean, I can assure you that there's not a cancer center in the country that feels good or wants to turn away a patient. It's not what they want to do. They're in the business to help people. But at the same time, they want to stay in business. And, we continue to see this. I'm going to ask Twyla about it tomorrow. You don't want to miss that. Twyla Brace, she's here on the third Thursday of every month. This will be her second appearance this month because we had some issues a couple weeks ago that I wanted to bring her in and talk about. But Twyla Brace will be here. We'll possibly open it up to callers again if you've got very specific Obamacare questions. We did that last time she was on. It worked out really well. We may do it again. We'll check with her and see what her schedule's like. But anyway, it'll be the time. If you have a very specific Obamacare question, tomorrow morning would be the time to queue that up on the phone line, so we'll try to get to that. 866-300-9298. They are our phone. That's our phone number if you want to queue your question up. We are going to get to the phones. Listen, the Dow up 88. We continue to turn a blind eye, deaf ear, whatever you want to call it, to everything that's going on around us. I find it absolutely incredible. I become more and more amazed about these markets every day. I wrote an article that you need to read. I don't know that it'll be posted on christianpress.com. I don't know that that will be the article that we post there, but it'll certainly be my newsletter. If you don't get it, you may want to get this issue. If you want to unsubscribe afterwards, you can do that. It doesn't cost anything. It's free. It's an email newsletter. You have to go to financialissues.org to subscribe. But I wrote an article about my outlook for 2014. And I came to some very disturbing conclusions about what I believe and also about me and my ministry here. And it is probably an article that will not do my ministry any good. As you know, one of the sources of support here for this ministry is our subscriptions, those that partner with us on the website. After you read this article, you may not feel the need to do that. That could hurt our ministry, obviously, but I'm willing to take that risk because I think it's the right thing to do when I lay out some of my, I don't want to say predictions, but projections for this year. And I'll have you know I may be wrong about the timeline This could happen next week. It could happen June of 2015. But I suspect between now and then it is going to happen. Maybe summer of 2015 at the latest. I'm very, very concerned. And I think that the whole Russia-China conversations, the whole Russia-Ukraine issue has brought so much of it to light. I've done a little bit more studying between the lines on some of the analytical work. Somebody said to me, I said this yesterday, last week, I've been right so often over the last 5 years. How do I do it? I've not been right. I mean, my conversations have been true and accurate, but I'm not right as if I were making predictions. I'm just looking at the math. I'm looking at the numbers. I'm looking at the economic data as we have it. And I'm not making predictions. I am specifically saying what is going to happen because it has to, according to the math, at some point in time. And some interesting news came to light once again this morning that I want to talk about real quick. General Mills. You know General Mills? Everybody knows General Mills. If you don't know General Mills, you've never eaten cereal in your life. Cereal is a staple at our house. It is not a consumer discretionary item for me. It is a consumer staple. I eat cereal for dinner, for lunch sometimes, and even for breakfast sometimes. It is a very expensive consumer staple in our house, unfortunately. But nevertheless, you know General Mills. General Mills made an announcement this morning that reminded me of something, and I had to search a little bit, that I said back in October of last year. Now, I didn't go back any further. I might have said it before that as well. But General Mills changes their profit projections for the third quarter of last year. Yeah, they haven't even got to fourth yet. Third quarter. It went up, and their profit rose $410 million. That's some good news, or 64 cents a share. Good news for General Mills, right? But General Mills, because this is a trend that seems to be fading away, along with their profit projections, has been willing or is willing to talk about as well for that same period of time, their net sales. Their net sales fell 1.2% to $4.38 billion. Fell 1.2%. A 1.2% back in the olden days would have, and olden days, I go back like 7 years, go back to the olden days where a 1.3% drop in sales would have been significant. Back in October, I talked about all the companies that are reporting higher earnings, and all we are doing is using those higher earnings as an excuse for this irrational exuberance. I hate to keep saying that term that Alan Greenspan coined, but there's no better description of what is going on in the markets and in the economy and the financial sectors and the global economies too, to a certain extent. Listen, it is confirmation that there's a lot going on in their profits going up. It's a manipulation. I don't mean in a corrupt way. I don't mean manipulation as in Enron creative accounting manipulation. That's not what I'm talking about. I mean manipulation in the way they are using cheap money, stock buybacks, and others to add to their bottom line and their profit line. There's nothing illegal or anything necessarily wrong with that. But here's what's wrong with that in general. And this is one company. FedEx announced today profits being up, but they didn't say anything about their carrying numbers or sales numbers, whatever they call it. Wasn't in the data. Wonder why. This has been a trend all year, last year, and nobody's talking about it. I talked about it in October and a couple other times after that. But look, it is important that that we understand when we hear corporate profits going up, it shouldn't be driving the markets if we don't have sales numbers going up. Because if we don't have sales numbers going up, we don't have necessarily more profit, more product being produced, which leads to a growing economy and jobs. But anyway, apparently there are those out there that believe that this is going to be good for the economy, that believe that this is the reason to be into the market. Well, let me just say something. That too is a house of cards. At some point in time, when this manipulation, I hate using that word, but this accounting practices that are going on. It's not manipulation. Again, it's nothing illegal going on, or nothing even corrupt or unethical from that stand, from in any way you look at this. But the fact of the matter is, at some point in time, the things that are driving bottom line will begin to stop, because it has to. When that begins to stop, when the deleveraging starts to pick up again and the leveraging starts to stop because it's bad for business, there won't be the sales to support the underlying profit needed to sustain the company. I'm not saying there's going to be any companies going bankrupt, but it's going to have a dramatic impact on the economy because it could lead to further layoffs and cutbacks. Maybe it could lead to further automation and streamlining. Either way, it's not good for jobs. It's not good for America. But we continue to miss that. And I saw these numbers coming out this morning, which reminded me of that. Also, another key issue, the Eurozone. Wage growth in the Eurozone goes up. I wrote about this as well this week, that wages go up in the Eurozone. And they're going up a little bit more rapidly than they have for the last 3 or 4 months. Wage growth outpaced the rise in consumer prices. That's a good thing. And that's very good for the Eurozone. We, on the other hand, have seen nothing but a decrease in our wages, yet no one is talking about it. Why? If you are one of those middle income people that are trying to figure out why it is, no matter how hard you try, you can't seem to get ahead, it would be because butter, eggs, and milk have gone up 10% this year. It would be because there's food that has gone up. We could see higher fuel prices once again as we head into the summer. Even that's not the problem. The problem is our wage growth has not kept pace. And we are making the median income of Americans now is at the same level it was in 1973. Some of you weren't born in 1973. But that is what our wages are when we factor in inflation. How is it possible we can ever have a thriving economy? Forget the markets. A thriving economy when that keeps happening. And how is it that the markets can have sustainable, key word there, sustainable growth in that kind of environment? The answer's simple. It can't. How much longer? We'll see. But it's not sustainable. You're listening to Financial Issues, 866-300-9298. We're going to get to the phones. I'll be right back.